In this video, I'll discuss Q1 FY26 result and Concall of 5-star business finance. So it is a secured MSME lender, and if I talk about the average ticket size, that is around 4 lakh rupees, and that is why the deterioration in asset quality happened very badly in this quarter Q1 FY26, and I will discuss it later. So let's talk about the geography. They are mainly present in the state of Andhra Pradesh, Tamil Nadu, Telangana. Okay, that is their main states, and they are overall present in 13 states across India. So let's talk about result. So first of all, asset quality. GNP in this quarter shooted up 67 BPS quarter on quarter and 105 BPS year on year. So if you look at their asset quality, it shooted up quarter on quarter level and year on year level also, and that is where if you hear the SBFC management's Concall, or if you watch my video on SBFC finance, the management of SBFC finance specifically said a thing that if we go down the line to down the ticket size, then we can see more deterioration in terms of the asset quality. Like upper 50 lakh, there is lesser pain. There is more or less year on year, there is no deterioration in terms of the asset quality. But if we look at 10 lakh to 15 lakh ATS, then we can see a 10 basis point of deterioration in terms of asset quality year on year. And then if we go down the line, more down the line, like under 10 lakh rupees, then we can see a 70 BPS of deterioration in asset quality year on year. And if we compare 5-star finance with SBFC, if we look at the average ticket size of SBFC, that is around 10 lakh 11 lakh rupees, and that is why SBFC's asset quality deteriorated less in this quarter. Whereas if we look at 5-star business finance, their average ticket size is under 5 lakh, and that is why like their 80% of AUM comes from under 5 lakh ticket size. So that is why we can see the deterioration is more in SBFC, 5-star finance. Okay, so that is the thing here, and that is why you have to see what the management of different businesses are saying, and that is where you can connect the dots that what SBFC finance management said in their Concall, and we can see similar thing with this company. Okay, so that is the thing. In terms of if we look at their 1+ DPD, 30+ DPD, that have been like consistently, like 1+ DPD and 30+ DPD have seen consistent deterioration in terms of their number. Okay, so that is another point, because if we look at 1+ DPD increased 108 BPS year on year. So that is what I am trying to say, that it has been these two parameters like 1+ DPD, 30+ DPD have been increasing for last 1 year from Q1 FY25, and that is what is happening in this ticket size. And if we look at SBFC's management also, they are saying similar kind of a thing. So that is the point here. In terms of the credit cost, earlier their guidance was around 75 to 100 BPS, but in this quarter credit cost is at 1.3%. So yeah, year on year increased by 70 BPS. So that is what is the whole story of 5-star finance, we can say. And now they are guiding us for a 120 BPS for next 1 year. So that is what you can say. So that is the part of asset quality. And And what the management is saying about the asset quality going forward, the management is saying that in July month was better than earlier April, May, June, and they are expecting the credit cost number, the GNP number to stabilize by Q2 FY26, and then from H2 FY26, in H2 FY26 they can see a growth in terms of the AUM growth. Okay, so that is what the management is saying. But again, the thing is that the asset quality deteriorated very badly in this quarter. Like as I said, GNP shooted up 105 bps year on year. So that is what is happening, and credit cost tells all the story that what is happening here. And let's talk about the AUM. And it is very obvious for a bank or a NBFC, like if their asset quality, if they are seeing any kind of deterioration in asset quality, then it is obvious that they would stop the disbursement, they would stop looking for growth, and they would more look for like collection to recover their loans. Okay, so that is the thing happened with 5-star finance. And if I talk about their result in this quarter, and AUM grew by 20% year on year. Like if we look at their growth trajectory till Q1 FY25, they were a 35-40% of growth engine in terms of the AUM. But after Q1, if we look at Q2, Q3, Q4, their AUM growth has slowed down continuously for last 4 quarters. So that is the point here. Like up in Q2, their AUM grew by around what 30%, and then 25, 23, 20, and they are here. So that is the point with AUM also. So it is not a good sign, and now they are guiding us for a 25% of growth. But again, the asset quality deterioration and all happened in this quarter, and I am not sure that how much they will be achieved like 25% of growth. But the management is saying we can grow at a higher level in the H2 FY26. So let's see what happens, but the signs are not good, that is what I can say. In terms of the spread, spread also has been decreasing for last several quarters. Why? Mainly because of they reduced their interest rate by 2%, okay, on incremental loans. So that is why the spread has been reducing for last 4 quarters. So that is another point in spread. And because of that reducing decrease in spread, decrease in NIM, we can see the PAT growth came down. It is obvious that if a company is seeing a decrease in spread or in NIM, it is very obvious that the PAT growth would be slower and slower in the coming quarters and coming times. So that is what happening with 5-star. In this quarter, PAT was little bit low, mainly because of the credit cost, obviously, but we should not expect a good kind of growth in terms of their PAT because of the reduction in spread and NIMs. So that is the point. The management is also guiding us for a 12 to 15% of growth in terms of PAT in FY26. Yeah, this quarter there was a hit of like credit cost in terms of their PAT, but going forward also, as I said, we should not expect a good kind of growth in their bottom line. So that is the point. But the management is guiding us for a PAT growth of 15 to 18% for next 3 years, which is again a disappointing number. if you can grow your AUM by 25% for next 3 years, and you are saying that you will do just 15 to 18% growth in terms of PAT, it is not good, obviously. So nothing to say about the company. I mean, if I talk about the opportunity, if I am a shareholder of 5-star finance, what I have done, I would like to sell all the holdings on the next day at 9:15. Okay, because I am not, I do not want a company which asset quality is deteriorating, and that is why I would like to sell all the shares on the next day morning only. So that is what I can say. And if a bank or an NBFC is seeing deterioration in terms of their asset quality, there should not be any kind of opportunity in terms of investment or anything. That is what I understand, and that is what I learned from the market. So that is why whatever price it is trading, I do not know, but I would never invest in this kind of a company whose asset quality is deteriorating continuously, and that is the thing I would like to say. So that's it for the video. Thanks for watching.